All right. So day 6. Yeah. Second day of week 2. Crazy. We're getting into this stuff pretty seriously. Now we're getting on the fun topics. So yesterday's video, break structure, change of character, as I mentioned at the end, is not super relevant, but it's going to start to make a lot of sense today. And as we progress through this week, and especially into next week, putting it all together, cannot wait for that day. You guys are going to have a blast. But today is liquidity. And by far the most important concept that you will learn going into this. I guess he didn't want to learn about liquidity. Oh, he's back. He does want to learn about liquidity. So how we're going to structure this, because I already have a video on YouTube about it, is no one had any questions other than Erad, I believe, which we're going to answer. So what I want to do, recap basically the video that's already out there, explain some concepts. I should have rewatched the video myself to know what's not in there and what's in there. But ideally we're going to make this like a 30-minute call back. So let's get into it. So liquidity, simply enough, is these key highs and key lows on all time frames. Okay. But just like all the other time frames, the higher the time frame, the more important. Okay. You're going to find liquidity on all time frames. The 1 minute, the 30-second, the 5-minute, 15-minute, the 30-minute, the fucking 37-minute. There's going to be liquidity somewhere. Okay. Now, I'm not diving into that. Liquidity is truly everywhere. And breaks of liquidity, liquidity sweeps, liquidity grabs are literally step 1 to my strategy. Okay, I cannot express this enough. This is truly one of the most important concepts. So any questions from now to infinity on it, I'm happy to help out and answer. Because if you don't understand this, you're not going to understand much. Cool. So liquidity is just the highs and lows. Great. Okay. Why is that liquidity? Why is this liquidity? Right. Up here, what had to proceed for the market to dump like this? Let's think about this logically, right? We have 4 options, I think. No, we have 2 options for now. You have buy to open, and you have sell to open. Remember, so that we trade futures. So when you short, you are selling to open a position, right? You are basically borrowing it until you have to buy it back. Okay, which we'll get to in a second. When you buy to open, you are in a long, and when you sell to open, you are in a short. So up here, we're going to use this quite a bit today, so I'm going to go ahead and just kind of favorite it. I thought I could, I guess not. Can I not favorite it? It's gone. Oh, there it is. Oh, frequently used. Whatever. Up here, we got money sitting, okay? Because who moves the markets? The market makers, right? They're the ones that paint the picture for us to get manipulated on. So when they come up here, what are they doing? They're selling to open, okay? So if they're selling to open a trade up here, short, let's say you get just somewhere in here, where are their stops going to be? Probably right about the highs, okay? If someone enters, hypothetically, let's say retail goes, oh, there's fair value gap, let me enter here. Where is their stop going to be? Probably the recent highs, okay? There's so much cash, whether it be retail, institution, or whatever, sitting up at these highs because this was a key point of movement. There is liquidity, right? Liquidity is basically just cash sitting. That's why we say, you know, in a fancy way of saying I'm poor, you say I'm not liquid. Cheat sheet for you guys, right? Or if you're very cash heavy, you're very liquid, right? Liquidity is basically another term for cash, right? So ideally, sometimes you'll see market makers want to come up, yeah, as unfilled orders. That's great. I like that, right? Sometimes you'll see price want to come up and sweep it. Now, this is not an example because it's from today and there was no liquidity sweep to the upside, unfortunately. So what we're going to do, we're going to go to the 1 hour. Now that you guys understand buy to open and sell to close, which I have no idea where the hell that just went. Did I delete it? I hope I did. Yeah, we'll delete it later. So we're going to go back and we're going to go find some 1 hour liquidity that absolutely has been swept. And there's a lot of it, right? But I want to find key reversal moments on purpose. Bam. Nope, that ain't even liquidity. I guarantee you that is on ES though. No liquidity there. Are we dead ass? There's not a single liquidity sweep on the 1 hour? Bro. Why are you going to toy with me like this? Okay, here's an example that we will use. So all of that is liquidity. Why? Because it is a key turning point, right? Key wick low. And you can mark out all of these if you want, which we'll get into in a second. But this is absolutely liquidity. Because we had buy to open, so we had cash sitting right there. Well, if market makers know that people who got long probably have their stops at these relative lows, well, look at what happens. They get stopped out and moved past. This is commonly referred to as a stop loss hunt, right? You hear that said all the time in the trading community. Oh, I got hunted, my stop, whatever. Right, and I blame Rod all the time for it. Though, realistically, it's because it is just sitting liquidity. We don't have enough like buyers yet to get the real push higher. So this pairs with the other stuff we will learn later on. But when you see this move higher and we are unable to break through this, sometimes we will refrain back, sweep out some type of liquidity to regroup with buyers, regroup with whatever before taking off. And this can happen as many times as possible, right? We come up, fail to take that high, and come back lower, right? You see this all the time as a refuel move. Okay. Now, behind though, we see there's a key point there. This is liquidity. This is liquidity. All of this is liquidity, right? Because it's key pivoting moments and all on different time frames. Okay. It's going to be important. When you see liquidity get swept down here in this range, you have the highest probability when it's a true sweep. Okay. When it's a true sweep, you technically have the highest probability of a reversal. Okay. At that given moment, when you see this, a true sweep, not some fucking dancing around down there, oh, is this a sweep? No, when you see 100%, hey, that's a liquidity sweep, understand there is the highest probability of a reversal. Okay? Bam. And look at what we targeted. Okay? We targeted all of said liquidity left. Why? Because where do you think market makers are going to make the money? Bam. Because look, what happens up here? Everyone who was short now has to buy. Bam. And of course, we're on a trend, right? Bam. Bam. So it just stopped out people at this liquidity, this liquidity, this liquidity, and this liquidity. Okay? That's how they're making money. Let's go for another example. We're going to drop to a 15-minute one because I know for a fact there's sweeps down here. Here's a really good example on a 5-minute. This is today. Look what happened here. We have a liquidity sweep of day lows. Bam. Which also happened to be liquidity sweep of another thing. And another thing. Right? Which we'll get into and why that's important in a second. We had a liquidity sweep. Okay? So let's find opposing, unswept, unmitigated liquidity. There's some there. There's some here. And there's bunch right here on the lower time frames, but we're going to neglect that for now. Some there, and there's some there, and there's plenty more on the lower time frames. Okay, we come down, we truly sweep liquidity. That is a 100% liquidity sweep. There's no confusion about this. And we blast off. We take out this, we take out that, and we take out all of this in here, but we get stuck up here. So what do you think happens? Do we go take out the lows? No, we don't, because it's still today. Right? Let's go to ES. I just want to continue to show you guys examples so you can understand everything. Examples are going to really, really help in seeing it first. Okay, that's a liquidity grab, so we're going to ignore that for right now. Nope. Yep. 1 hour, right? That's resting liquidity up here. Is that a liquidity sweep too? Please be. Oh my God. Look at this. We were down here. We left liquidity. After taking out some of the shit down here, which I know for a fact there's liquidity on a lower time frame over here. We took off. Bam. Pivoted. Why? Because we had sellers step in. Push, 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 push. They're selling. There's left cash up there. We come down. We dance around. And look where we come back to. We take out this liquidity. Okay. We make an attempt higher. We do not have enough juice. So look what happens. We left behind said liquidity. Right? Why? Because that's a pivoting moment. We didn't take it out here. We drop again. We took it out here. What do we have when we sweep liquidity? The highest probability of a reversal. Bam, we get a reversal, which is also a refuel move on the macro picture here, right? You see? Refuel, because we can't go higher after this one. We come down. We take out this liquidity, the first liquidity sweep. Take that out. Right? Clear as day. We sweep even just like we did today on NQ. We did this again. See? More liquidity getting swept. Bam, blast off. Took all of this liquidity out. Took this off. Look what happened. Liquidity sweep. Highest probability of reversal. Bam, drop down. Take all of this shit off. Get a liquidity sweep. We rally off. Look where we go to. We go to liquidity. Bam. Dance around up here a little bit. Grab some liquidity. Keyword, grab. Highest probability of reversal. Bam. Look at where we go. Liquidity. This, you can do this over and over and over again, right? Resting liquidity. We take off. Key point of pivot, right? Because this was a new week opening. Sweep that shit out. Come down. Do we have enough? Absolutely not. We refuel. We take out this. Bam. We sell off. Okay. You can swim through the market with just liquidity. Okay. It is truly the most important part, and the most important thing about it is understanding that it has the highest probability. Let's actually use this example for what a liquidity grab is. So pretty cool that you guys now understand what a liquidity grab is, or liquidity sweep is. Okay. Don't worry about terminology as long as you guys really understand what the difference is. Okay. Liquidity grab, liquidity sweep, liquidity break, liquidity manipulation. I don't give a fuck what you call it, as long as you understand what it is. So as we know, this is key liquidity, right? This part right here. 69.08. Well, we came above it and we didn't just wick it. Okay, we got a nice jump higher, straight down on the next candle pretty much. And this was weird because it was like, you know, Asia open and whatever. And we kind of danced around it. Okay, we kind of danced around it and then slam down. Well, is that a liquidity sweep? Technically, no. It's a liquidity grab on the 1 hour, right? We came up here, we were dancing around, grabbing it, you know, picking up as much as we can. We're robbing the bank, stuffing the cash in a duffel bag. Okay, that is what's going on right here, is a grab. If you go to the higher time frame, like a 4 hour, you can also see what it kind of looks like. And then on the daily, and this is going to be weird since it's like the opening of Asia, you can see that it is a liquidity grab or liquidity sweep, right? Bad example because it is technically the rollover of the day, opening of Asia. So if we find one on the daily and reverse engineer it, and don't even get me started about double bottoms. Let's go back to NQ. I like NQ significantly more. Bam. On the daily chart, is this a liquidity grab or sweep? It's a sweep. Okay. Don't care that the candle closed and opened here. Damn, this is gonna be a bad example too. Now that I think about it. Why can't I have like a sweep on the daily? Okay, this one. Screw that example, even though it probably works. I don't want the days to roll over. There's liquidity. Okay, we wicked it here and sold off pretty bad overnight. Okay, as we drop time frames, you're gonna see us dance around and proceed to take out, you know, liquidity like that. We dance around up here. This is all a liquidity grab because we can't break through it and create a break of structure. Okay. There's no break of structure. It is just a liquidity grab. We are dancing around in it until we finally get enough, have enough sellers paired up, and push out of it. And then at that point, where do we target? Opposing liquidity, right? Down here. Okay. And down there. Well, now it's down there. Liquidity does change. Okay. So if this is previous liquidity and it gets swept by this candle, guess where the liquidity now is? Bam. Okay. This is previous liquidity. Guess where it got swept? This is the new liquidity. Now, it also can create more liquidity without sweeping it. Bam. That is also liquidity. Technically, depending on how intraday looks, I don't really remember, all four of these highs can be technically liquidity because we're on a high time frame. Liquidity here, here, and here, and here. These two are so damn close, this is going to be a great example for what is called low resistance liquidity. When you come up here, think about how market makers think. We'll even add this one in because I'm calling that low resistance. If price comes up into this and grabs here, do you think it's going to be satisfied with its little bit of cash? Look, you're robbing the bank. Go big or go home. That's how the market makers think. They're going to take this one out too. Do you think they're going to leave this one up here chilling with all that cash sitting up there? Fuck no. They're greedy. They're going to grab it too. Bam. Low resistance liquidity. There's more examples of this from today. We go down to the 5-minute and we'll look through pre-market. All of this is relatively close. All of this liquidity down here is relatively close. We have this here. We got this here. We got down here, which technically got swept already, so we'll move this over here. And we got this here. Well, let's think about let's be greedy people here. Let's be greedy, okay? Be as greedy as possible. If you know there's money sitting at every single one of these, and they're relatively close, it's not going to take a whole lot to get down there. Do you think you're going to be satisfied at 1? No. You think you're going to be satisfied at 2? No. 3? No. 4? No. Okay? You're going to want to take out all the low resistance liquidity. Just like right here. All of this trend high and low, or trend high in this instance, because we're in a downtrend, is going to be low resistance, especially those two, right? You see how close they are? And you might be like, well, Sam, so far you're already 30 points apart. Guys, we're on a 5-minute chart. Go to 15-minute. Go to a 1 hour. That liquidity is all so close together that being swept doesn't mean anything. And I'll show you an example of not low resistance liquidity. Okay? We slap this on replay mode. And select bar. Bam. We come in here. As we have already discovered, all of this is low resistance liquidity. So let me ask, is this low resistance liquidity? Is the gap that is roughly 100 points, over 100 points, low resistance? No. Okay, it is not. That is why, if we speed through this, we did not go down there and grab that. It wasn't needed. It's too far away. It's too risky, in a sense, right? It's not low resistance. So if we look down here, though, let me exit out of replay mode. If we look down here, could you consider this low resistance liquidity? Maybe. It's a little bit of a stretch. Okay. Drop time frame though. What about all of this? Trend liquidity. Bam. 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 Are we going to want to take these two out? Probably. What about the third? Or even the fourth that I didn't mark out right here? Probably. Okay, at this point, if we're chilling right here, do you think this is like high resistance liquidity? No, we're going to definitely take this one out. Potentially even take that one out. And then look, where we're going to start stacking ideas and stacking time frames. If we look at this liquidity right there, do we see any other low resistance liquidity? Yes, we do. We have it here, and here, and here, right? So this is where, if you were in the live trading today, we went over this to a degree and planning other stuff. But I said, if we come down and we break through and take out, truly take out, not just the sweep, but fully break through 719.75, there's a high probability of us coming down and taking out 25,569. Okay. So if we know that liquidity wants to be swept, guess what we just formed? Guess what we just learned? We learned how to create targets. Okay? We learned how to create targets and spot key spots of reversals. Okay? Now, let me teach you one more concept, and we do got to go over to my main chart for this. And there's an indicator to make your life easier. Okay? I believe in making your life as easy as possible, and if you can, great. So use indicators. Bam. You can see I have different trading sessions open. This is Asia. Yellow is Asia. Red is London. If you can figure out why, don't say anything. It's the funniest joke to me in the world. Just as we know, the 4 hour, let's actually put this back in replay mode, and we're going to go to New York Open to show how I do this almost every single day. Oh, I forgot. Nope. God damn it. Why is it? Just like how high time frame liquidity, daily, 4 hour, 1 hour, is all very much more important than a 1 minute, 5 minute, 7 minute liquidity. Okay, we know the higher the time frame, the more importance it has. So far, we've learned this about break of structure, change of character, learned this about trends, and many other things. And this is going to be universal, just in the market. Okay, higher the time frame, typically the more important, with some exceptions. The only exception when it comes to liquidity is session liquidity. Okay, session liquidity acts basically as a magnet. There's 4 sessions. Well, yeah, 3 sessions, right? I thought it was a 4th. I think there is, but not for NASDAQ. In here, and they overlap with each other. Okay, so this is New York. Everybody knows New York opens at 9:30 Eastern and closes at 4 Eastern. You have pre-market and after hours, and those are the ones that overlap typically with the other sessions. Okay, so if we look right here, there's New York high. Okay, what's the next session? Asia. There's Asia low. Okay, now where's Asia high? In between the 2 yellows, remember. Okay, and they overlap, so the shading changes colors, but you get the point. There's Asia high. Where's London low? London can be anywhere from here on. London low is there. Bam. What about London high? London high and Asia high overlap, so they're the same point. Okay. Look what happened. We manipulated previous New York highs. Bam, on CPI. It's the first wick. Look at how price wants to target all of the other session liquidity. Okay, sure enough, look at how we could set up a trade here. Right, once you manipulate it, there was so many opportunities here, and by now I was done trading. But you come down here, right? This is the point that swept all liquidity as we went over. We then swept that liquidity again. Now, guys, let me tell you, liquidity is important. If you see a liquidity sweep of a liquidity sweep, it's typically something to take massive note of, okay? This is a great example. On the 5 minute, we can see that this sweeps all of this liquidity, right? And that's the low. Bam. This is, yes, I would call this a sweep. From this point left, I'm calling that a sweep. I don't care. Or a 1 minute grab, whichever one you would prefer. Then we come down and we sweep that low again. And sure enough, we can start to build the building blocks on top of it and see many different trades come out of it. And before someone goes, well, Sam, why didn't you take it? My account was locked because I made enough money. Bam. There's building blocks that you can execute along off of, right? Using session liquidity for intraday trading is super important. I cannot express that enough, okay? So just like look right here. Let me turn this off. See where New York opens at. We'll mark it out real quick. 9:30, bam. That red horizontal, white vertical line. We got Asia low right here. look at how price came down, manipulated, aka swept this Asia low before taking off, right? And look at where we were targeting, but unswept. We did sweep, however, this to a T. Wow, liquidity sweep. What do you think happens? Highest probability of a reversal. Change of character. This was the trade, yeah, from Friday. So Friday's a little complicated, but you get the point, right? Session liquidity is super, super important. Okay. So real quickly before we dive low-key a little bit deeper, that's what she said. Session liquidity is super important. Great note taking. Okay. Liquidity okay, so session liquidity is super important. Liquidity sweeps have the highest probability of a reversal. Low time frame, I'm just going to use LTH, LTF, sweeps, or grabs, can be high time frame sweeps, okay? Liquidity is our targets. Liquidity, I'm just going to do this, is the first step to everything. Okay, I cannot express that enough. Okay. So far, does anybody have any questions? No questions? You guys are good? Watch the video, you should be good. The new thing, and then, oh yeah. Low resistant liquidity is for greedy market makers. Okay. They like to grab it all. Okay. I'm gonna take it as you guys are good and not asleep. God, now I know what it's like to be a teacher. Okay, cool. Let me answer your question real quick while I think of what else to go over. You said this was on silver futures. I'm just gonna literally pull this up. SL, nope, SI. What time frame are you on? Let's see if I can. I like how you marked up. You're on the 1 minute. Cool. And then the time frame, which might be different. No, it's not. 13 o'clock. Damn, you did get screwed. Cool. Let's say you entered roughly in this range, somewhere down here. Okay. On the 1 minute, this is liquidity, right? And let's see, did we get a liquidity sweep to start? No, you didn't, right? However, I would not be surprised if you got a fair value gap or something. It's rough. Yeah, you technically got a liquidity grab and I guess sweep. So yeah, I mean, you kind of just got messed up. I'm not gonna lie, right? This is why silver's a you know what, because like even if you took the fair value gap, then you get like little messed with, manipulated down there. Let me pull the chat back up. Yeah, right. Overall though, let's say your entry is just solid, right? You still have to be cautious. If you're trading on a 1 minute, you got to watch out for 1 minute liquidity. Trading on a 1 hour, you got to watch out for 1 hour liquidity. Okay. Typically, the time frames that you're trading is there. There's a baby fair value gap below that. You're right. Give or take, somewhere right there. So you got a good entry. Cool. Look at all the liquidity you got here, here, and this is just 1 minute liquidity. I'm not even counting session. Here. This is liquidity. All of this is just low time frame, 1 minute liquidity. And since we're trading on the 1 minute, you got to be cautious of it. If you go to the 15 or 5 minute, look at how you don't have to worry about it as much, right? But there's bigger moves, right? Whatever. Unfortunately, you do have to just be aware of it, of all liquidity. So if I had entered a trade down here, when you get to your first spot of liquidity, aka your first target, your stop needs to come up and you need to have no stop. Or wait, you shouldn't be risking anything. Okay. This is where you like move your stop loss to break even, slightly in a profit, maybe you trail it, right? This is where you start to mitigate it. Funny enough though, look at how we swept it. Come down, grab this liquidity, and then take off and take out the rest. Right. On the 1 minute, all of this is, in my opinion, low resistance, which watch this be the exact same distance. Pretty much. Right, and the reason this is low resistance and I'm not counting that is because if you get here, this is 0.18, and then from here, this is 0.3. It's arguable. I will say that. It's arguable, for sure. My best advice to you is I don't like silver. Silver loves to play games, and you'll learn that. Just like, right, and here's another thing. If we go to ES, ES loves to create a double bottom lows, okay? ES, for some reason, does not always like to sweep liquidity, and instead wants to be like, haha, you see that? You think that's a liquidity grab? Nope, we're just going to create equal lows. Do I know why? Not a fucking clue. I really, really can't tell you why that is. And I also can't really find an example of it. ES loves to create equal lows and equal highs instead of it being a sweep. I have no idea why, okay? Like even right here, look. These are equal highs and lows. I have no idea what the reasoning is behind it. I don't even know if there is a reasoning behind it, but it's the case, okay? Sometimes there's just things you got to deal with on it being a little tricky with you, and silver is definitely not one for the faint of heart, in my opinion. But I just overall, to answer your question, my friend, you got to be aware. If you're trading the 1 minute, you need to be aware of all 1 minute liquidity, right? Like if we had taken this trade here, I need to be aware that this is liquidity, this is liquidity, this is liquidity. Like literally all of this is liquidity. And there's so much more that, oh wait, never mind. I was gonna say that probably doesn't get swept, but it actually sweeps just about all fucking 1 minute liquidity. Except for the very high. So you just gotta be aware of everything. It does sometimes make your charts look a little crazy, but then again, it is just kind of necessary. Yeah, trading on silver and gold are definitely not for the faint of heart. Gold is a little easier, but silver I do not recommend. Okay. If you want to go ride that bull and give it a shot, I'm gonna tell you what happened to me. I lost $2,000. Okay. If you want to go try it, by all means, maybe you got better success than I do. I'm not gonna say it can't happen, but it is not easy. It likes to play games. It likes to move very quickly, randomly. It's not as my baby is in Q. Your baby could be gold, can be ES, can be silver. You don't have to trade like I do. You don't have to trade the same shit I do. But silver is not easy, and a lot of people will agree with me on that. Let me look back at the notes. Where we leave off. Low resistance, great. First step to everything, true. These are targets, yeah. So hopefully it makes sense, right? If we know that liquidity wants to get mitigated and get swept in simpler terms, right? Where do you think our target would be once we swept this and have the highest probability of reversal? Opposing liquidity, right? Opposite. So if we're looking short up here, our opposing is down here. If we're looking long, opposing would be up here, right? Cool. So, and then if you're looking short, where's your new liquidity? Down here. And now, unfortunately, also down here, which I'm really surprised we haven't swept already. So you use liquidity as your targets. That's super important. Highest probability of a reversal. Okay. Session liquidity is super important. This is number one. I cannot express it enough. And if you want the indicator, I have no idea what it's called. CM Forex session. And then I have Oh, I guess, yeah, it is Aussie. Wait, what? Aussie, I think Aussie and Asia overlap, so I'm pretty sure I made them the same color. I don't know. But yeah, so here are the ones I have turned on. You could literally look this up and you'll find it in indicators. Bam. And yeah, that doesn't matter. Right, now technically, pre-market Asia does open up at Eastern Standard 6 p.m. So occasionally, like for this example, right, Asia high is arguably here. That's during open, but then again, I also would watch this high as well, right? Because that is, nope, that's 4 p.m. Where is, there's an example of this somewhere. I don't really know where it is. But occasionally you will see stuff like that where it's like it wants to grab the technical pre-market open liquidity of Asia and whatnot. Oh yeah, man, all things love to trade. They can trade down there. They got their own markets. I don't know what they're called, but they definitely have them. Wait a second. This is replay mode, right? Yeah. Okay. I was about to say, hold on. What the hell just happened on NQ? Um, cool deal. I'm pretty sure that's everything. What questions do any of you guys have? Questions are now very, very welcome. You mean to tell me none of you have a single question? Tell me you don't have any questions so I know you're here. And liquidity can be left behind, guys. You don't have to sweep it. Okay, look, there's all-time highs right there, unswept. You have these lows down here, unswept, right? It doesn't have to be swept, okay? It's acted as a target, right? Once again, just reiterating, higher time frames are more important, and frank, honestly, probably the most important. Yeah. So liquidity sweep would be like, honestly, let's use this example. But here you go. So it doesn't have to be the wick. Because look right here. On the 1 hour, this body closes and it comes right back down. But if I go to the 2 hour, it's a wick, right? And that's where it's the liquidity grab is the alternative to it, like just kind of coming up here, dancing around and then going down. But that is just a high time frame liquidity sweep, right? And same thing with what this is up here, right? So on the 4 hour and on the daily chart, that is a liquidity sweep, right? Because it's a wick. We came up, bam. But if we go down the 15-minute, I guess this is CPI, so it's really not the best example. Sometimes we like to dance around. And that's where, like, even if we look down at Asia lows from today, on the 5-minute, we danced around down here. We even swept the sweep of liquidity. Okay. But then if I go to the 1 hour, it's just a sweep. If I go to the 15-minute, it's kind of it dances around. It's a grab, right? And this is where you can see this one even clearer. When we go even lower, you can see this is 100% a grab. And then we go to the 1 minute, and it is 100%, 1000% a grab. But look at what this is. We're on the 1 minute, the lowest time frame I would recommend, and that is a 1000% a sweep. That's not a grab. Okay. Now, looking at that, that's really not the best example, though. I wish I could find like a stretched apart liquidity sweep on the 1 minute. Let's see if I can real quickly to show you the counterpart to that. It's gonna be tough. I'm not gonna lie to find one of these in the 1 minute. You wouldn't dare show me that. Oh my god, it does. I think. Haha. Wow. What are the chances? So I can't go anything higher than the daily or 4 hour. I don't think. This is 100% a liquidity sweep. Okay. I go to the 5 minute. Shit. It is still a liquidity sweep. I go to the 15-minute. Still a liquidity sweep. I go to the 1 hour, right? So if you reverse and engineer it, wherever that line just went, liquidity sweep, right? If you go in reverse and find the lowest time frame first, then it's like 100% a liquidity sweep. I don't even know where that line is. Yeah, and then it's the 4 hours where it changes because And not really, technically. Liquidity sweep, it just doesn't go on the daily because it's within 1 day period. Right, so if you reverse engineer it, then no matter the time frame, it will be if you start bottom and go up. But sometimes, like, what I would consider a liquidity sweep on the daily or 4 hour, it might be a liquidity grab. But yeah, bodies can cross too. Just if it's a break of structure, it's not a sweep. Okay, so one of the things, if we pair yesterday's video to today, let's go back to this one. If we see this high, we're creating an uptrend, very baby uptrend, so I don't run out of space. Okay. These are all breaks of structure, right? We're breaking out of the structure in the trend and pushing higher. Okay. What occasionally will happen is people will front run the idea, so the minute it breaks out, they're long. They're buying to open. And it's a liquidity sweep. Right? And then the rest is history, right? People front run the shit out of it and get caught by the sweep, the false breakout. Okay? That's why waiting for a candle to close is important. Occasionally, now, whether this be a 1 hour, fucking whatever time frame, it's up to you. Right? So break of structure is also very important and it's front running. The same is true to the downside. If I inverted this, it would look the exact same way, right? And that is why it works. Just like with change of character, we form the uptrend, and then we change character. Right here, we have a break of structure and change character, and then bam, right? So what do you think happens right here? There are some people out there who get FOMO'd and rush into the idea, and they are shorting already just for it to be a liquidity sweep, and we bounce back higher to go take out this liquidity. Okay. So it does sometimes will catch you, and this is why front running ideas and FOMOing into trades is not necessarily the best idea. Okay. I don't know why I was going into that, but let's say hypothetically we come down here, we dance around a little bit, we don't really go anywhere, right? I'm not calling this necessarily a break of structure. That's a liquidity grab. Okay, because on a higher time frame, this is gonna look like a sweep if I built this the right way, right? So bodies can close too. The only thing is, like, let's go to a daily, which is like the highest I'd really recommend. Let's go find where a body closes above. There's a great example, right? So right here, body closes. Is this a break of structure on the daily time frame? No. Okay, so it's not a break of structure. It's a liquidity grab or a liquidity sweep, right? That, in my eyes, I'm just calling it a liquidity sweep. Like I said, terminology isn't super duper important. Here's one on the daily of it being swept, but it's technically a grab. We came up here, we danced around on the daily, and then come down, right? Liquidity sweeps, I'm going to tell you, are probably more important than grabs, if I'm going to be honest. We come down here, there's no sweep. Does it make any sense, Dom? I hope it does. If it doesn't, no worries. Just tell me, and I'll try and reiterate it in a different way. It does. Okay, you read. Good. I'm assuming all the concepts you're teaching are applicable to stocks as well. Yeah, absolutely. Yeah. If we go to SPY, the only thing that's going to be the difference between, like, if you go to SPY or whatever, is going to be that you don't see Asia. So you just have gap up and gap down, which you have New York high and whatnot. So that's really the difference. But like if we go to Meta, right? Absolutely. There's liquidity sweeps all over the place. There's a sweep. Bam. Okay. There's a break of structure. Bam. There's a sweep. Okay. And there's a sweep of a sweep. All right. So there's liquidity. It works on all different time frames and all, well, not different time frames. All different shit. There's sweep. So yeah, absolutely works on stocks. Yeah, I'm understanding a little bit more. What are you confused on? Let's see if I can help you out. No, so I traded options for a very, very long time. Traded options, and still occasionally will, but that's where like all of this was. This is all like if I go to MU, which might already be cleared because yeah, look, you can see my trails from behind, and this is back in 2025, early 2025 and late 2024 on MU, some random stock, right? So, which we'll get into all of this stuff because this is still relatively important. But traded options for a while, moved to SPY and Q0DTEs. Really hated theta. Someone was like, "Yo, why don't you check out futures?" And I was like, "Okay, cool." And then I was like, "Wow, this is so much better than 0DTE options." So, yeah, and that's where you're not penalized for staying in a trade on futures, which is super nice. Yeah, theta can, theta can really mess you up. It just messed me up the other, today actually because I closed a position on take two, which is heartbreaking, but it is truth. So it is nasty. But yeah, I come from options, equities, 0DTs, weeklies, monthlies, whatever. I mean, I didn't just get started on futures. I've been trading for years. Yeah, I'm so sad. Well, cool. I'm gonna go ahead and end the recording here. Recap the notes again. I don't think I'm missing anything. This plus the YouTube video that's already out there should be plenty. At least to like narrow down what type of questions you do have. So yeah, cool. There's your notes. Tomorrow is building blocks. Oh, tomorrow's gonna be a great day. And there's also a YouTube video on this already. I'll have to rewatch. I think it's like 40 minutes long though, or an hour. So cool deal. Tomorrow building blocks. We'll get that done. This video will be posted here shortly. Just remember to take your notes. If you want to go ahead and get ahead, go watch the YouTube video on building blocks. You'll come in knowledgeable for tomorrow. So cool deal. Appreciate you guys.